Right, yes, that's from yesterday. But let's hear now from Dr. Victor Oboh. He's the director of Monetary Policy Department at the Central Bank of Nigeria. Great to have you on the show, sir. Good morning.
Thank you very much, and good morning, Nigeria.
Yeah, so, definitely we had the last meeting for 2025, but it seems a lot of analysts were surprised at this decision, this whole decision, and it's coming, even as inflation appears to be moderating. What factors led to the MPC to, maintain this rate rather than lower it? Because we expect normally once the MPC decides to, cut rates, most of the time, the next meeting, another cut, should follow. So I'm wondering, is there fire on the mountain?
Thank you very much. There's no fire on the mountain. I think at this meeting, there were much more level of optimism given the performance of macro indicators across board. You will agree with me that government as a whole and central bank in particular has attained some substantial level of macroeconomic stability. Considering the sustained deceleration in inflation, the sustained stability of the exchange rate, the sustained accretion to external reserves, all point in positive trajectory. However, we have seen that inflation still remains at high level. Double digit is not something that any economy that aspires to make some dramatic changes will admire. There's the need to bring inflation down to a low level, at least single digit level. That is the aspiration of the MPC. So on the one hand, MPC is cautious. Yes, we have attained some level of stability. We've seen inflation coming down, but it still remains high, and there's still some monetary level of contribution to inflation, where retaining that rate at that level will help to bring it down further. You can see some sympathy for growth also in part of the decisions that were taken, especially at the corridor level. So if you watch the upper corridor, which is the standing lending facility, it has come down to 27.5 because it is now plus 50 basis points and minus 450 basis points. That again gives some little window or headroom for banks to be able to lend lower from the central bank and to be able to support growth.
All right, so looking at what's played out in a global space, and definitely we got that designation from President Trump saying that Nigeria is a country of particular concern. Do you think that concerned the MPC?
It is something to watch out for, but it is not a serious issue that will crystallize immediately, given the level of diplomatic effort that the federal government has deployed into resolving this matter. The MPC is optimistic that the diplomatic, deliberations and collaboration with the U.S. government will be able to bring this issue under control. But it's not something that MPC whisked away. It was also part of the issues that MPC looked at. But it's not that of a high risk, given the level of diplomatic attention that the federal government has given it to it.
All right, so you did mention the adjusted parameters yesterday, but we kept the cash reserve ratio, liquidity ratio, that was held constant, but just the asymmetric corridor, around the MPR was adjusted plus 50 negative 450 basis points. You did mention that should allow banks, be able to lend more. But what does it do to money supply?
What happened is that when we lower the upper band, which is the SLF, we are saying that banks can borrow at a cheaper rate, from the central bank, giving them some headroom. But at the SDF, the Standing Deposit Facility, we felt that it is important again to widen that corridor so that banks would also push part of that funds that hitherto were deposited at the Standing Deposit Facility. They could now begin to use part of it to trade among themselves. Interbank trading is fundamental to strengthening that corridor and, of course, the transmission of monetary policy impulses. So we want to see better trading among the banks. We want to see stronger intermediation, to the real sector and those selected sectors that will be able to jumpstart growth.
They argue that high interest rates, that increases, definitely increases borrowing costs and also, makes it hard also for households, to, get credits, and kind of like slows economic recovery. Is the CBN and MPC, are they finding it easier to balance, controlling inflation and also, getting some growth into the economy and also expanding credit access? Is it getting easier in your opinion?
Yes, it is. Recall that in the last MPC meeting before the last one for the year, that was the September MPC, that informed the thinking and the opinion of the MPC to cut interest rates by 50 basis points. That brought it down to 27% from 27.5%. That was done to encourage growth recovery, actually. Also, that was the same reason that informed the decision to now reduce the conventional CRR by 500 basis points, which brought it to 45%. And the MPC has also, in a way, apart from retaining the MPR, also considered the adjustment in the corridor within the same direction.
All right, so I did, have a conversation, yesterday with some, bank customers, and they did say that, most of the time when the CBN or the MPC starts to increase rates, the banks, they quickly follow suit, by increasing interest rates, to either businesses or lenders. But when the easing, started, from the last cut, seems they're not feeling the drop yet, when they try to get facilities, from the banks. Do you think, is that normal, for, most of the banks not actually giving you lower rates, at this time, even though we did get that 50 basis point cut?
Yeah, the expectation from the central bank and, of course, the MPC is that by any rate cut that is effected at the CBN, between the CBN and the commercial banks, we would expect the transmission to trickle down to retail borrowing rates. That is supposed to be the ideal. But sometimes we also know that, prices are downward sticky because banks sometimes will begin to complain about all other costs, structural issues, cost of security and all that. But in broad terms, we would expect that with much more access to funds available at the disposal of the deposit money banks, they should be able to now channel this credit to some sectors in the economy. And due to that competition among them, we expect that the borrowing costs at the retail level should depress.
All right, we'll definitely keep tracking that. But what timeline or economic conditions would prompt the CBN at the MPC to consider, cutting MPR, going forward? What indicators are being monitored, most closely right now?
So what the MPC has been doing and is in conformity with global best practices in a regime of heightened global uncertainty is to be data-driven, to see what the data is saying between one MPC and the other, vis-a-vis what happens in other climes, especially economies that are our competitors. So what will happen in terms of forward guidance is that if the deceleration, is sustained, if it continues in the near term, definitely the data will provide guidance to MPC on when and how much to cut.
All right. So, sir, before I let you go, what are you seeing in 2026 when it comes to inflation and interest rates?
Sorry, can you repeat that again?
Yeah, I said, what are you seeing? I'd like to get some forward guidance from you. What are you seeing in terms of inflation, interest rates in 2026?
We have a forecast that points to a declining inflation trajectory in 2026. And we expect that the sustained tightening that had happened in 2025 will continue to impact prices going into 2026. We know there are also some risks that we need to grapple with, but we are also getting ready to ensure that we are able to, mitigate some of those risks. So we are building buffers. We are prepared at all fronts to be able to ensure that those emerging risks are adequately contained and they do not have any significant effect on inflation. So on the balance, we expect that the outlook for inflation is positive going into 2026.
All right, thank you so much. And I'll try to share your optimism there. Thank you so much, Dr. Victor Oboh, is the Director, Monetary Policy Department at the Central Bank of Nigeria. Thank you for coming on the show, sir.
My pleasure. Thank you.
All right, we'll take a break now. When we come back, we find out what's happening in the logistics industry in Nigeria and West Africa. That's in a moment. Just stay with us.